Hello and welcome. You are watching this very special interaction we've planned for you with someone who has been the top management of one of the largest Indian listed IT companies. Now he wears a hat of a professional investor, venture capital, private equity investor in early stage IT enabled plays here. In fact, he's the best place to understand what's happening in the technology as overall as a space and ecosystem. Surely COVID is playing a role, but otherwise too it appears that the world is taking a major liking toward this sector, be it the listed space or the unlisted space. I'm talking about Mr. Abidali Neemuchwala of Dallas Venture Partners, joining us all the way from Dallas. Mr. Neemuchwala, thank you so much for your time. I hope everything is nice and safe at your end there in Dallas.
Thank you so much, Ajaya. Thank you for having me on the show. And I hope you and all your team is keeping well in this very tough times under COVID.
Right. Yes, sir. Everything is wonderful. Things are good. Rocking here at TT now, thanks to technology. We all are doing well. Let's start by understanding your thoughts on what's happening in the IT environment. Technology is a better way to put it. Investor stance overall towards IT has changed a whole lot in the last 8-9 months, be it the listed space, be it the unlisted space, be it technology stocks in your own backyard there in US hitting fresh highs. How are you analyzing investors rush towards technology overall? Was COVID an only tailwind, or otherwise too there's a lot of things happening in the overall ecosystem that technology's prominence was bound to happen?
It has been very interesting because technology, what we all called as digital transformation, the next wave of adoption of technology across enterprises, across all businesses was happening. But it was happening at a relatively more gradual pace. Things that would have happened by 2023, 2025 because of COVID got highly accelerated. And the reason for accelerations are two primary reasons. Reason number one is that a lot of change management is required whenever you bring a new technology in. And consumers and users of the technology who need to undergo a learning curve because of COVID, because of personal reasons, people underwent that learning curve very fast. So just as an example, I have a 85-year-old aunt and a 90-year-old uncle, and they have never used a computer. They started doing Zoom and telemedicine with their doctors almost within the first month of COVID. By April, they were comfortable talking to their doctor over Zoom. So the adoption of technology by consumers became faster, and that is why the acceleration to digital transformation happened much faster. That is one. Second is just the survival of certain businesses by adopting digital transformation. Restaurants are a very good example. Restaurants who evolved an entire model of curbside pickup, home delivery, being able to order online, pay online, having a menu online are things that restaurants were very slow at doing it. Eventually, they would have done it in 4 or 5 years, but they were able to accelerate it. Retail, you go industry by industry, and they have adopted technology. So both of these things coming together in COVID has accelerated digital transformation by almost 3 to 5 years. And that has resulted into the attraction towards new technology, new startups, existing technology firms who are more futuristic, having a much more attractive valuation in the market. And the consumption has increased significantly, which is all reflected in their results, as well as it is reflected in how the market is viewing them.
Right. Right. We recently saw HCL Tech come out and give out higher guidance. Commentary coming out of Accenture also seemed to be suggesting high growth, which lies ahead. How are you analyzing commentary coming out of some of your friends who are running these large companies in the industry? Do you think this growth momentum, first of all, do you think that there's genuine leap in growth which is happening for companies? And also, do you think this trend is more durable, this is more structural than we've seen in the past?
Yeah, so speaking in general of the IT services industry, I think the thumb rule is every dollar that enterprise spends on buying technology. Today, that technology could be buying a cloud technology, for example, adopting cloud. There is anywhere between $2 to $4 of services revenue which accompanies it. So, since there is such an acceleration in adoption of all of the new technologies, whether it is cloud, whether it is artificial intelligence, whether it is blockchain, IoT, any of these new and futuristic technologies, the accompanying services revenue is going to accelerate as well. And that is why I do feel that in the medium term, there will be a certain amount of increase in demand. And hence, my optimism is high of the IT services industry. Also, along with that, what has happened is most of these IT services industries were undergoing a transformation, trying to move from legacy to digital. And COVID, like for every other business, has also accelerated that transformation, that reskilling. People say never let a crisis go waste, and companies have, for the most part, used this time to be able to invest in their people, to be able to reskill their people, to be able to create intellectual property that helps them deliver in the new post-COVID world. And both of these things coming together, I think we'll see a structural shift in increased demand. And there is always a pent-up demand. Whenever a crisis happens, customers immediately stop spending. We saw that in the April, May, June quarter and a little bit in the March timeframe when you saw the results of these companies, because customers had paused spending, they had reduced their discretionary spending, they were taking stock of how they want to plan their budgets, and some of those activities are going to come back. So in the short term, there may be a slight bigger surge in demand.
Right.
In the medium term, there will be a structural shift of accelerated adoption of technology and hence IT services.
Right. Mr. Neemuchwala, here the BSE IT index is now trading at multi-year high, over 1.5 decade high. Do you see that it's kind of pricing in and the environment may be supportive of 10-12% plus kind of a growth for some time, with better improved realizations and margin profile as well, probably because they are in much better position to negotiate their agreements with clients out there? Do you think all of that has improved? Is it possible going forward?
So I think there are two dynamics at play over here. One is obviously the inherent advantage of IT services industry and IT services stocks, and that has been driving the market. But we should also not forget that there is a second piece to this, which is increased liquidity because of what all central banks have done, and at the same time some other sectors which have been more acutely impacted negatively because of COVID. So there's also in some sense a flight to quality and a flight to resilience, which today the IT services industry has provided. So I think it's a combination of both these things. The former will continue to stay in the longer term. The latter, as the monetary easing and other things come back to normal, as other industries provide opportunities for investment, will kind of slowly taper down. And I think anybody who's looking at IT stocks would and should look at both of these aspects together as they look at as they try to predict how IT stocks will do in the long term.
Right. Let's now shift focus and talk about everyday consumer businesses, which because of machine learning, AI, technology, internet explosion and mobile revolution which is happening here in India, are transforming their business models. One of the biggest companies here in India, Reliance Industries, has been buying out small IT-backed startups left, right and center. Pharmacy is an area, Meditech. InsurTech is one very big, strong rising area which is seeing interest. And then our own Zomatos of the world, continuously seeing more money coming in from private equity side. Education is completely transforming. How are you looking at this side of the market? How are you analyzing this side of the market attractiveness, their scalable business model, how scalable are they, how durable are they, versus the valuation some of them are being offered at or trading or are available at?
I'm very excited. I'm very excited with what is happening on the intersection of IT and digital technologies and India. And that is why, as you see, Ajay, I have personally devoted myself significantly with Dallas Venture Partners in participating in that. Simply because I feel India is one of the largest consumer markets. That consumer is very technology savvy. That consumer is buying online. That consumer is consuming content online. That consumer is paying online. And that creates a huge opportunity for digital businesses. And all of these are being represented by the entire startup ecosystem, which is developing. I am very excited as I talk to startups in the kind of innovative ideas that are coming up, both on the consumer side as well as on the B2B side, coming out of India. India always had, you need about 4 things for a very robust innovation and startup ecosystem. India always had talent, unique talent. Earlier, the talent used to come to the US, come to the Silicon Valley, and then execute on their ideas. Today, they are able to do it right here in India, in Bangalore, or in Hyderabad, or in any of the places. The second thing that you need in a robust innovation startup ecosystem is enterprises who will enable these ideas, enterprises who will buy these ideas, enterprises who will do proof of concepts with these startups and try out and take risks. I think that is happening more and more. And as you said, companies like Reliance, Jio, and others are lending themselves to these startups. The third thing that is required is venture capital. And that is where we at Dallas Venture Partners are trying to bring in venture capital. There is investable capital available. People are redirecting a lot of their investments from traditional businesses into technology, and they want a reliable process through which that investable capital can be channeled into innovation and startups. So that is the third aspect, and that is happening very well. And the fourth aspect is always the enabling aspect. What, for example, Stanford has done in the Silicon Valley. Today, the IITs are doing in India. The role of the government with Startup India, with Digital India, with the focus on a lot of job creation through the startup ecosystem has enabled, the Atal Innovation Mission and many other things that the government is doing, the various institutions are doing, is very helpful. The ability to create AIFs, the ability to, a lot of things that are very subtle, but they all come, when they come together, they help promote this startup ecosystem. So I am very optimistic. I'm very excited. We have a market, we have the capital, we have the enablement, right, and we have the talent in India.
Right. Mr. Neemuchwala, now you're the partner of Dallas Venture Partners there, and wanting to bring capital and expertise from there to help Indian smaller entrepreneurs with who are technology-backed models are trying to develop a larger business. Tell us what kind of opportunities and specifically you have on your radar, or you are researching, or you are scouting for. A lot of viewers and in the startup ecosystem who follow our channel, who are watching you right now, what would your message to them to be if they want to attract that kind of expertise and capital? Talk to us about your strategy here.
Absolutely. So at Dallas Venture Partners, we are very focused on what we call as B2B SaaS software. Companies, startups who have great ideas in terms of how enterprises can use their technology to become better. So software startups focused on business-to-business solutions, which can be sold to enterprises. And apart from bringing capital, I think a lot of capital is available to good ideas and these startups. Apart from capital, at Dallas Venture Partners, the way we differentiate is we are bringing a ton of expertise. Even personally, for 28 years, I have worked with enterprises that consume technology. I have a very good understanding of what makes an enterprise buy technology, what makes them drive innovation within them, and helping these bright entrepreneurs to be able to take their ideas, message them properly, create a good product market fit, and then position it to the enterprises, and not only Indian enterprises, but global enterprises, to be able to become successful and scale up. And that is what we bring at Dallas Venture Partners. So the startups who are listening to us, is the message to them is that bring a great idea. We will help you make that idea successful. We will help you with the messaging, with being a first-time CEO, with scaling up a high-powered team, being able to represent yourself on the global stage, selling your product, and being able to be successful. So all of that mentorship and coaching that is required in any industry needs that. I think we have a great amount of young talent, a little bit of paying back to the community from people like myself and our team at Dallas Venture Partners.
Right.
Will be able to coach and mentor these entrepreneurs, will make them go a long way.
All right, Mr. Neemuchwala, I'll let you go on that one. Have a great time there looking for companies. I wish you all the best in your new innings as well, and look forward to interacting more regularly with you, getting your insights on the channel. Thank you so much for your time today.
Absolutely. Thank you and have a nice day. Bye-bye.